Every day, independent oil and natural gas producers are out there drilling smarter, going farther, and delivering the energy that fuels our economy and strengthens our national security. It's a side of the industry that's dynamic and foundational to how affordable, reliable energy gets made in America. This podcast is about diving into that world. We're talking tech, policy, production, and pressure points. Everything that shapes how American energy actually works. This is Longer Laterals. Welcome to another episode of Longer Laterals. I'm Anne Bradbury, CEO of the American Exploration and Production Council, and this is where America's energy story meets Washington. Today, I'm thrilled to be joined by Arjun Murti, partner at Veriton and one of the most respected voices in energy markets. Arjun spent much of his career on Wall Street, where he built a reputation for sharp, forward-looking analysis. Today at Veriton, he continues to shape how energy investors and industry leaders think about energy markets, bringing a grounded, market-first perspective to some of the biggest questions facing the sector. He shares these perspectives on his Super Spiked video pod, which everybody should check out. Lots of Team AXPC fans consider Super Spiked to be must-watch weekly content. Arjun cuts through the noise to what really matters in global energy markets, not just for oil and gas, but for all forms of energy, both domestic and international, and the forces that are shaping global supply and demand dynamics. Arjun, welcome to Longer Laterals.
Thank you, Anne, for that very kind introduction. It is a real pleasure to be with you today.
Let's jump right in. So we are having you here at a truly momentous moment in history, both geopolitically, but certainly for energy markets. You've been through a lot of different cycles, a lot of different major geopolitical events. How are you thinking about where we are today?
I will say this is by far, I think, the most impactful and uncertain time in energy markets, not just in my now 34-year career, but in my 57-year lifetime. This is on track to pass the impacts of the Arab oil embargo years of the 70s, which was a particularly traumatic time. Now, there's still a lot of uncertainty. We have to see how long this war is going to last, how long the strait is going to be closed. But to have a disruption that is somewhere between a minimum of 10 and a maximum of 20 million barrels a day of oil and refined products, it is simply untenable to have that strait continue to be closed for an extended period of time. The impacts are going to be felt most notably in Asia, then in Europe. We are somewhat more insulated in America on a near-term basis, but it is hard to overstate how impactful and how uncertain it is right now with the Strait of Hormuz being closed, de facto closed.
Yeah. And I think one of the challenges right now is the duration is uncertain, right? And so the scale is unclear until we know the duration. Can you talk a little bit about, well, first of all, let's talk about here in the U.S., the impact that we're seeing. So I think one of the things that's really interesting is the split screen difference between oil markets and natural gas markets here in the U.S. You effectively have 20% of the world's oil and 20% of the world's natural gas blocked, prevented from going through the strait, blocked from getting to market. And you're certainly seeing crude oil impacts here at home. So let's start there, and then we'll talk about the difference that we're seeing in natural gas markets. So here in the U.S., we've seen sharply higher energy prices. We're not necessarily seeing scarcity or rationing like we are in other parts of the world. Can you talk about impacts that we're seeing here in the U.S., what you think that might look like moving forward as this continues, but also what the rest of the world is experiencing right now?
Anne, I think your audience in particular will appreciate this, but the shale revolution in both oil and natural gas is really what is setting the U.S. apart in this moment relative to especially that 1970s example where we were very dependent on imported energy, in particular from the Middle East. And it was also a very different time for markets. There was no NYMEX at the time. We didn't have freely floating prices. And so you had to resolve the supply-demand imbalances through physical shortages and gas lines that we saw then. We have none of that this time around. And that is a function of both markets, the free flow of imports, exports, gasoline, diesel, all the different products. But really, especially in the last 15 years, the significant growth we've seen in both crude oil, natural gas liquids, and natural gas as a result of the shale revolution. And that is insulating Americans. Yes, the pump prices for gasoline is a little bit higher. As you noted, U.S. natural gas prices, they may actually at this point be down slightly from when this crisis started. And so we are fortunate to be somewhat more insulated than especially the Asian countries right now. They're already seeing some signs of stress, and we're barely a month plus into this, and you're already seeing signs of physical shortages, forced work from home, and these kind of things to conserve on energy. I think we're very lucky to not be seeing this now, and it is thanks to the shale revolution. That is also not just an upstream thing; it's a downstream thing. Our refining capacity, despite not having built a new refinery since I think 1977 was that the now famous Garyville refinery, we've grown our throughput through our refineries. We've debottlenecked and expanded, getting more out of our existing infrastructure. All of the midstream expansion we've seen, whether that's natural gas pipelines, oil pipelines, all the NGL processes we have, the totality of all of that is allowing us to be, again, relatively better positioned for this current crisis.
So understanding, and I should note, we're recording this on April 2nd, so this is a very fluid situation. By the time this airs, probably early next week, things might be different. But can you talk about where you see this going, how countries might be thinking differently about their energy security moving forward? I mean, this is a supply disruption that everyone thought about, but I don't think anyone really realized was as real as it is today. So how do you think this might be shaping countries' views of energy security, and where do you think this goes from here once the Strait does reopen?
It's a great question, Anne, and I think a critical question. And at this point, even if peace broke out tomorrow and the Strait reopened, I think there are some sort of permanent changes that will come around this, let alone if this goes on for who knows how many more weeks or months or even longer than that. And I think on the first hand, this does illustrate the criticality and the importance of American energy, both for American consumers, but also to meeting the needs of our friends and allies and economies around the rest of the world. One of the great things about America's strength is that our companies don't just serve domestic consumers. We are often the providers of key products and services around the world. Think about our technology sector. We are very fortunate to have the world's leading Silicon Valley, Palo Alto companies that provide all the tech that we all use, and they sell globally. When you think about healthcare products, when you think about capital markets, there are just numerous areas where having strong American companies that sell to the world is a strength to our country. They employ lots of people. All of that requires American energy, which I think a lot of your audience is involved in providing. Therefore, what happens to the global economy does matter. To me, this is not about, I think we should not be looking to say limit exports or these kind of things that would have a negative effect on other countries. I think that would hurt America. It would hurt our companies. It would hurt our energy industry to do anything that would restrict our exports, which I think is one of the concerns we have out there, no matter who is in power, that can feel like a very tempting type solution. In terms of some of the responses, I think this illustrates the need for additional American oil and natural gas supply to the rest of the world. Where would Europe be without our LNG exports? Coming into this crisis, I think there was some question of, hey, LNG capacity is expanding a lot. Maybe it's expanded too much. Will there be LNG oversupply? There's no such thing as LNG oversupply with the Strait closed. And not only the existing plans that are scheduled to come on over the next 5 years, but all the additional projects that the current administration has approved in the last 12 months, I think all of those are going to be needed in the years ahead. So whether it's our country or whether it's our allies around the world, they're going to need American energy. It is a critical source of, I'm going to call it, and this is a moral term, good energy to the world. I do usually put Canadian energy in that bucket as well. I think there's there'd be a real strength to thinking about this as an integrated North American effort to meet the energy needs of the rest of the world. So both U.S. and Canadian energy, I think, is going to be one of the sources of helping companies and countries, think through post this crisis, meeting their energy needs.
Yeah, I think that's so important to think about longer term. Let's shift for a second and do a deeper dive into natural gas, which you alluded to. It is remarkable that today in the US, natural gas is below where it was in terms of prices when the crisis started. That is because of our domestic production. Markets in other parts of the world are very different right now and are really struggling. Can you talk a little bit about US natural gas markets versus global natural gas markets and what you're seeing?
I think there's several reasons for why Henry Hub natural gas prices, our common benchmark, have stayed around $3 or even below it per MMBTU. And you're seeing prices that at times are 5x, 10x, even 20 times that in other parts of the world, most notably Europe and to varying degrees Asian countries. We have a real abundance of natural gas. I will say, though, we're not the only country with a lot of natural gas. So Europe could have more natural gas than it does right now. Various Asian countries could be developing more natural gas. That speaks to our system of both capitalism, markets, regulation, and law, and the motivation to go out and find and develop this stuff. It goes to the property rights, the mineral rights that motivate citizens in our countries to support the energy industry. And all of that has contributed to our abundance of natural gas and this growth in liquefied natural gas. I have to say, I've now been doing this 34 years. I would never have expected America to have become a large LNG exporter. And just in 10 years,
The largest.
we've gone from almost zero LNG exports to be number one, passing Qatar, which is a country that unfortunately is impacted negatively by the current war, and Australia, which is not growing their capacity at this point in time. And this has been a critical benefit to the rest of the world. So it can sometimes get lost on the average American how all this stuff goes together. It's not just the E&P industry. They're a critical part. It's the midstream industry. It's all of our rules and regulations that enable this. I think we are fortunate that we do believe in states' rights. I think there's a difference between states like Texas and Louisiana that are on the coast and then don't get caught up in the rhetorical politics of I'm either for or against oil and gas, that sometimes states that are not on the water and therefore have to cross different state borders, their infrastructure often gets negatively impacted by that. So I think it's been a real blessing. The totality of what makes America great, a big part of that is our energy. And you can see it in the difference in natural gas prices. Our natural gas prices are a fraction of the rest of the world.
And that has been true while we have become the world's biggest exporter of LNG, which is a pretty remarkable story. So let's stay on the LNG topic for a second. So US LNG has been in demand for quite some time. And there's a lot more capacity that is in the works. By some estimates, LNG export capacity in the US will close to double by 2030. And some have suggested that there might not be a market for that. And I'd like you to react to that.
Coming into this current war, people expected oil glut was an oil oversupply and an LNG glut, LNG oversupply. I think both those things, we pushed back in Super Spiked and at Veritan on the oil glut narrative. We didn't push back as hard on the LNG glut narrative. We did think in 2028, 2030, there may be a little bit of oversupply from the timing of projects versus demand growth. I think with this war, we can throw both of those oversupply narratives out the window. Oil is clearly going to be very tight for a period of time here. I think that's going to be true of LNG. I think the question with LNG, though, is it is problematic for the LNG industry in the U.S. to have Qatari LNG out for an extended period of time. And you heard this at the CERAWeek conference, the big conference put on by S&P Global, where U.S. CEOs of U.S. LNG companies expressed concern about Qatar's LNG being out, where when you lose 15 to 20% of your LNG supply like that, which is what has happened with the Strait being blocked, it results in much higher LNG prices, and you worry about what is going to be the trajectory of long-term demand. So even though in the short term, U.S. LNG exporters are going to benefit from higher prices, I share the concern of those CEOs about what might an ongoing closure or ongoing disruption is probably the better term. It may not be as simple as is it open or is it closed? Is there going to be ongoing risk? What is that going to mean for Qatar's flows? And so on the one hand, we can say there's an imperative for more American LNG projects to come online. I think that is true. But I think there is some concern if there's an extended disruption, which we're not expecting, but we don't know, of Qatari LNG. Will that lead buyers to consider greater amounts of coal, which is abundant in a lot of countries, other forms of energy? And I think there is a question of long-term LNG demand in the event that the disruption lasts much longer than we think or we would hope it will.
Yeah. You mentioned CERAWeek, which, for those who aren't aware of it, is really the Super Bowl of energy conferences. It's put on by S&P Global. It happens every year in Houston in March. It was last week. You were there, and one of your observations in your Super Spiked podcast last week was how dramatically the conversation has shifted, both at CERA but also other conferences, from the energy transition that was really the prime topic 3-4 years ago to what I will call, I'm not sure if you would agree with this term, energy realism. I think one of the reasons I've really been a huge fan and follower for a long time is your framing of, we are part of the lucky 1 billion people in the world who have 24/7 access to reliable, affordable, abundant energy. And there are 7 billion people in the world who don't. And, that certainly informs underlying demand, long-term demand dynamics. So you've been talking about this for a long time. Talk about maybe how you've seen that shift from energy transition to energy realism over the last few years.
And you're hitting upon my favorite topic, and really the reason I went from being a retired Goldman partner to now, I say unretiring and joining my friend Maynard Holt at Veridan as a partner was, Super Spike started as a de facto protest against that very narrow definition of, quote, the energy transition, that we were going to go out of fossil fuels, go only into renewables and a few other technologies under some arbitrarily short time frame, all under the auspices of we're going to prioritize counting CO2. And we can have a variety of opinions on emissions and how to deal with it or not deal with it. To me, there's no world where the world was going to organize itself on a CO2 framework. All anyone cares about is when I start my car, when I turn on my lights, do they come on? Can I move forward? And I appreciate you referencing my line. There is the lucky 1 billion of us that get to take that for granted. And there are the other 7 billion people on Earth that aspire to the type of lifestyles we take for granted. And they're all in various stages of economic development, China being perhaps more progressed. Unfortunately, some combination of 54 to 55 countries in Africa, just using a real small fraction of even Chinese energy, let alone American energy. So there's a long way to go. We're going to need all forms of energy, and it's going to vary depending on the country. But we've seen that conversation shift massively. I think people will ask, will pendulums swing? And yeah, of course, political pendulums invariably swing. But the idea that the world was going to organize itself around a CO2 framework, that never made sense. And I don't know how much of your audience, there may be some who are very passionate about climate and the environment. Even to those folks, my opinion has been, you're denying, I liked your word, Anne, energy realism, that no one operates that way. I would argue that even climate activists don't operate that way. Maybe there's a handful of monks and other deeply religious figures who truly live something akin to a net zero lifestyle, but no one else does. And so even for folks who are particularly passionate about the environment and climate, you got to get your organizing principles right. And I talk about a natural energy hierarchy of needs. It has to be available and it has to be reliable. That's all anyone cares about. Ideally affordable most of the time. But in the short term, if you could pay a lot or do without, you will pay a lot. And of course, when it comes to geopolitical security, most individual people could care less where their energy comes from. At the country level, one cares about geopolitical security, as we're seeing in this current war, for the purposes of reliability and affordability and these kind of things. And so the final point I'd just say is when we talk about being realistic, clean air, clean water, 100% correlated with being a richer country. Yeah. That's not even a close call.
Yeah.
There's no question that things like biodiversity and carbon emissions have an inverse correlation with energy usage often. I'm going to continue to say it is going to be energy availability and reliability that's going to trump any of these other issues. For some of those developing countries, if they do not have a lot of oil or they do not have a natural gas, they are going to be motivated to try and figure out what are the next generation technologies that might not be combustion based for the purposes of availability, reliability, and security. You can see this in China. Their 50% EV market share is a function of trying to limit oil imports. I do not view it as a climate plan per se, not even close. In fact, they use a lot of coal to drive those electric vehicles. This is about geopolitical security, availability, and reliability. And so I think when one thinks about, quote, decarbonization, it's going to be through that geopolitical security lens, and it's going to be about providing the technologies. And just the final point, we're going to need all the new stuff in addition to the traditional stuff.
Yeah.
The amount of energy the other 7 billion people are using is so little compared to what we use. Even for folks who produce only oil and natural gas, you as much as anyone should be rooting for the new technologies, because economic growth is what allows American commerce to thrive. Mm-hmm. We should all be rooting for GDP growth, and some of that is going to come from the newer technologies.
Yep. Yeah, to be clear, I think you and the folks at Veriton talk about those new energy technologies and all forms of energy, more than most folks, grounded in that sense of energy realism, which I find so refreshing. Do you think that this is sustainable, this focus on energy realism versus carbon accounting organization, or do you think that that's part of the pendulum swing as well?
I think it's a great question. I think in the U.S., clearly our politics invariably shift back and forth. I do think it's deeply unfortunate that we live in a world in the U.S. where for some reason energy sources themselves have become partisan. I find that completely illogical as a kind of by background, a Wall Street markets kind of person. How can oil and gas be viewed as, quote, Republican, and somehow solar and electric vehicles be viewed as, quote, Democrat? I find that to be ridiculous, actually. And in fact, whether you're a Republican or a Democrat, we should be looking to maximize our oil and natural gas resources. I actually think there's a pretty meaningful role for coal to play at a bare minimum, continue to support the existing coal plants and then export what we could to the rest of the world that is going to use it. But I also think when you look at Silicon Valley, when you look at even some of the leading technology centers in Austin and increasingly even Houston, there should be as much of an emphasis on the newer technologies. I do think things like long duration battery storage, trying to crack the code on geothermal, both traditional nuclear, making it better, new nuclear, will some of that stuff work? Like there's a whole host of technologies that I think are very interesting and would contribute to American strength. So I don't think this, perhaps the energy realism has been on track to come more true than less true. I think, unfortunately, the rhetorical language from each party, so far, we haven't seen a lot of change there. Now, will we swing back to a net zero world? I'm going to say I don't think so. I am sure if Democrats were to regain power, we will see more of an emphasis on the newer technologies and rhetoric that speaks against, quote, fossil fuels. But I think those days of net zero are done. I think that was the aberration. What would be great would be to get our politics back to the individual sources aren't partisan, but we debate how much should we rely on markets and how much should we rely on rules and regulation. That was a classic sort of right versus left debate. And I'd love to get back to it because I think the truth of the matter is pure markets are never the answer. Clearly, pure government regulation is even less ever the answer. You usually need a mixture of the two. I'm going to generally favor markets as being the better path to go, but free markets don't solve all of our problems. There really isn't any such thing as a, quote, free market. There's always going to be some element of rules and regulations. So what is that right balance? I will be hopeful and say we'll get there. I think, unfortunately, dueling executive actions every 4 years, that is not healthy for any American company anywhere. And mercifully, we have states' rights. So states like Texas and Louisiana have allowed oil and gas to continue to grow. I do hope we can get to a better spot in our politics. Unfortunately, that may be the one area there's not a lot of optimism at this exact moment.
Yeah. Your point on the pendulum swing is noted, given, the sort of long tail that companies have to look at when they're investing and deploying capital. It's, not a matter of months or weeks. It's a matter of years and sometimes decades. So one last topic I do want to cover before we close, and that is AI and power demand. So shifting the focus, at least for a moment, back here to the US. I know this was also a big topic at CERAWeek and has been for the last couple years. So there was a lot of talk about a demand crunch coming in 2030, where electricity prices may rise if new infrastructure isn't built to meet this growing demand. A lot of estimates say that power demand could grow by 25% by 2030, which is a massive amount given it's been pretty steady for the last couple decades. How are you viewing the electricity demand outlook and our preparedness to meet it?
I actually think this is perhaps one of the most exciting areas of energy today. My background has been more on the oil and gas, the full value chain side of the business. Power, while all energy, power sort of has its own set of analysts and bankers and companies and so forth. I think these things are converging. I think one of the things that I feel most optimistic about, we just previously were talking about some of the rhetorical divides between the two parties, which is deeply unfortunate. I think an area where we can feel better is the inclusion of both big tech and big industrials, as well as some of the smaller companies in those spaces, to the energy conversation. What is remarkable about this CERAWeek conference, it's always been a global energy conference. At various points in time, other sectors you'd see there, tech has been there the last few years. This year, they were fully part of the conference. In fact, to use the S&P language, they were foundational partners, meaning major supporters of the conference itself. And that is something that I think is a good thing because like the energy industry, whether that's oil and gas or power, the technology companies are global in nature. They recognize we need to have sensible energy policy, more energy supply of all forms in order to meet their technology goals, which is dominating the AI race. And it is a big race with China and other parts of the world. I do think we're in the lead. We do have the leading companies, but there's a Mark Andreessen line, software is going to eat the world. It's been a great line from the A16Z co-founder. But I think what we've learned is all software requires hardware, all hardware requires power, and all power requires raw materials, whether that's copper or critical minerals or oil or natural gas, nuclear, and so forth. I think there's a much greater appreciation of that. And so, in this country in the 50s, 60s, 70s, and even 80s, we did grow our power supply by 2, 3, 4% per year. And it's only been in the last 20 years that we haven't grown it for a variety of reasons. So it is possible to grow power generation. My own estimates are something like a 3% CAGR over the next decade is sort of a reasonable base case. There's some estimates, as you note, that are higher than that. Some are a little bit lower. Whatever it is a positive number. It does get back to some of our previous conversation is, will our political system allow for infrastructure to get built? It can't, and again, it can't be that one party's favoring one set of infrastructure, the other party's favoring another. And if we keep switching every 4 or 8 years, it's very hard for businesses to think long term. I think our markets, I think our companies, I think the fact that individual states can kind of, quote, do the right thing and look out over longer periods of time gives us a fighting chance against what can sometimes be the unfortunate pendulum swings at the federal level. But we could use all forms of government. If there's an all of above of all forms of government, local, state, and federal, again, I would make a plea for that. And I think all of that is going to be needed to have healthy and growing power markets. China has more than double the size of power generation than we do. Over a decade, they grow by the size of a, quote, United States. Now, they have a bigger population. They're more energy intensive in their economy. So there's some other reasons for that. But I think we should take very seriously in that the fact that it is much easier to build things in that country than our country, and that has to change.
Completely agree. Thank you for popping in that China footnote and preempting my next question, because I do think that is really important to keep in mind whenever we're talking about this domestic AI issue as well. Well, Arjun, thank you so much for being with us today. I am going to close with one question that I ask each and every guest. And that is, what is one thing about your job or the oil and gas industry in general that would surprise most people in Washington?
Well, I'm going to give one surprise for each party.
Okay.
I think for Democrats, I would encourage them all for just 1 year to be an equity research analyst covering the oil and gas sector. And I think they'd be shocked that the profits are deeply cyclical, There are times where industry does make money, but there's also times where industry loses money. And for the average company out there, the return on capital about equals the cost of capital, meaning it's a tough industry to generate excess returns. There's a lot of competition. There's global competition. I think the Democrats often view the oil and gas industry as making lots of profits. Sometimes they do, a lot of times they don't. And I think understanding those profitability cycles is critical to actually having a healthy and functioning energy backdrop. I think my one surprise to Republicans would be that some of these environmental and other considerations are relevant to companies. Most, in fact, I'm not even most, I'm going to say every oil and gas company that I know, which includes upstream, midstream, downstream, integrated, and I believe this also holds true on the power side, take health, safety, and the environment very seriously. That's usually the first thing they talk about, whether you're at a board meeting, an analyst meeting, or what have you. These aren't just, they don't do it just to be polite. It is deeply rooted in these companies. And with that would be some amount of thinking about the environment. And so this isn't about gutting our environmental rules. It isn't about being, quote, anti-ESG. It's figuring out what are the common sense things that we should be doing. And I will argue that what will help the world is not just more oil and natural gas and LNG and all these kind of things, but we have the chance to have the best labor standards. We have the chance to have the cleanest oil and gas in the world, especially when you look at where it's coming from other countries, whether that's, again, I'll name some countries, Russia, we're in a war with Iran, some of the other producers in the world that have historically not been friends with America, their oil and gas often is less clean, less labor friendly. And so those kind of considerations, Republicans should realize what are the common sense things we should do to support those initiatives at these companies.
That is a great answer on both fronts and really appreciate it. A lot of unique insights, Arjun, from you, and so much knowledge dropped in the last 25 minutes. So thank you so much for being our guest today. It was a true pleasure. Look forward to seeing you next time. And thank you again for being with us today.
And I loved your questions. Thank you so much for having me. And I look forward to seeing you again.
That wraps this episode of Longer Laterals. Thank you so much for joining us today, and please join us next time.